The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I was on break Thursday and Friday with a nephew here who came to Asia to visit me, and I want to show you the place we stayed at. This is, if you guys are looking on, this is an incredible island, and it's got some cool features to it. And if you guys ever want to come on over, this is a great place to stay. But let's get right into the 10-year. All right, so obviously the notes here on the 10-year, on the 10-year, they are the notes. We talked about this close below unfair lows on the daily, which are kind of, below those unfair lows on the unfair highs on the weekly, that DMZ, if you will. And when we got back up above there, then it was not okay to be short, right? And we've talked about not taking shorts on the 10-year, even when we have these mitigating circumstances below profiles. We've also, just kind of said, hey, sit tight. Let's kind of really still take longs until we're told differently on a long-term basis based on a weekly breakdown, which hasn't happened whatsoever. So, again, when we get back above that DMZ 126.10, this is the 10-year chart. We want to just, really continue to, especially when we close above, continue to look at this as a long opportunity. And why? Basically because of that long-term relationship, the stock market has gone straight up, and while I was gone, climbed, immensely higher. And that relationship where, notes and bonds really aren't selling off to the degree that the market is climbing higher and the economy is so-called okay. This has kind of been the free trade to me, the free look, showing its hand constantly, showing strength still in a market that goes straight up against that historical relationship. I hate to make it so simple sounding. I mean, we can put a lot of theoretical slants into why the 10-year and the 30-year are hanging in there, and some of the just fundamental things that are out there. But that real simple way of looking at it: markets go up, notes are going sideways. Markets go down, notes are going up. When do the notes ever really go down? They haven't proven to me that they've really wanted to go down, and even in extreme stock market uptrends. So here's the situation. This is obviously the daily. We just got some new inflection points to pay attention to here. Got a really, really small relative profile down here between 126.25 on the daily and 126.02. I haven't seen one that thin in a long time. What does that mean? That means that we're probably not going to trade inside this profile. All right, that means that the leverage is probably not trying to trade against these inflection points on the inside of the box, so to speak, the inside of the profile. We're going to try to trade breakouts. All right, now the cool and the neat thing that could happen is if the 10-year climbs a little higher, comes back and retests this in the next couple of days, or maybe even today, or just breaks down below, closes below 126.02. But again, I'm not still convinced that taking any kind of short stance on the treasuries are well advised. So that's the take on the 10-year, and I hate to be so simplistic about it, but keeping that simple concept in mind over the past couple of years has really boded well. And again, we always talk about it, until we're told differently, until the technical damage really shows us that the trend has changed. You can't overthink this. It's a pretty simple equation in my opinion. So as we've talked about the 10-year, let's just stroll right into the S&Ps. All right, well, here we go. The December contract here. And we talked about 2014-50 combined with 2019. Getting above that on Thursday, powering above, closing above, And let me just blow this up a little bit. And then coming back in that powerful retest around 2019 to 2014, that DMZ. The reason I'm looking at this the way I'm looking at it and not trying to overthink this one also is because as we look at our breadth, this changed on the 20th, all right, on the long term. On the 24th, the intermediate changed positive breadth on our speedometer here around the 17th. So again, intermediate traders, the bulls came out and changed that trend around the 17th of October. The shorter terms obviously had a lot more bearing on this ahead of time, but we're still long-term breadth positive, and until that changes tone, what we've seen is that you need to be buying support right now. Simple as that. So we've got some support mechanisms here at 2019 down into 2014. I'm going to show you some more pictures in a little bit, Chapman. And I think you might end up coming over here after I show you this. But we're going to look to buy support. And that's just, it's, again, a simplistic view that we've got to pay attention to as we look at the S&Ps moving forward to some of the other indices. Let's take a look at the NASDAQ really quick just to kind of cover some of the usual suspects. This thing really didn't even have a chance to leverage against anything up top here. Here's the weekly, blew through the current unfair highs and then the previous. Remember, that's like an exponential moving average. Don't see a lot of conflicting information to think differently here. This is the daily. You do have something up here, 41.76. As you can see, it's kind of ricocheted off of there a little bit. But, again, I don't see a lot of conflicting information. Don't see a lot of reasons to go short here. Here's the 240. As you can see, we've used short-term mechanisms to buy support. And it looks like, from a classical technical analysis standpoint, this is the type of, I always think like, what am I thinking if I'm short right now? I'm concerned and I'm scared, right? That's good if you're trying to buy support and be long. I always try to put the other shoe on or drop or however that saying it goes. And as we compress up here and don't really want to get away from these areas, namely, the daily unfair highs at 41.76, that, probabilities historically say that that's probably going to get blown through and then scare some shorts even farther. So again, that's kind of the look on the NASDAQ. Let's take a look at the DAX here really quick. This has, been a little more troubling to kind of get going and doing what it needs to do on the upside. And, here's the situation. We talked about this 93.15 down into, excuse me here, let me just pull this up. We had 93.20 previous unfair highs, unfair lows on the daily, and then we've kind of got these new unfair highs here on a daily box, and this appeared lower than price action, so that's kind of bullish in itself. And again, we're not wanting to really get away from those weekly unfair lows. So, even with the euro and the situation, I know you've probably read some news on Italy coming out. Europe's a screwed up place right now. But the DAX, looks very similar to some of the U.S. indices, even though it's weaker on a relative scale. This action of kind of compressing up into those weekly unfair lows and staying above daily unfair highs. This is kind of no man's land, if you will, right now. But, if I'm short this, I'm a little concerned also. So that's the take on the DAX. Going back into the Treasuries for a second, I wanted to mention the 30-year. A lot of guys trade this. Here's the weekly. Do have some targets above 142.30. Let's call it 143. Still bullish on this as well as the 10-year. And as we kind of, let me just see where the close was there. 140.21 and unfair lows were, 140.27. So just like the 10-year poked back above, you got 144 up here on the daily, and you've got, as we stated before, around 143 on the weekly. So you got some targets above. Still like this to buy support when you can. Here's the 240, kind of broke stride recently. And on the daily, the leverage point and the uncle point. I always talk about stops here. Below 141, you got to kind of think about, based on your appetite for risk, based on some noise levels, consider kind of calling it quits there on the 30-year. It's just amazing. It truly is amazing. The economic figures keep coming out, books cooked or whatever you want to call it, as they are or not. It's just mind-boggling for me to see these notes and bonds continue to go up and yields continue to go down on the market's going up, but that's just something I can sit back and ponder. Don't try to make sense of it. Gold. Get through some of the rest of the usual suspects here. We're going to get some stocks in a little bit. 1206 weekly was the last kind of customer stance there, but I kind of called it quits on the long side below 1218. And we've got a new profile appearing on gold. We've already hit. Remember, this profile appeared yesterday's close. We hit it already. This is your resistance level, 1180 on the short side on gold. We've kind of backed off there about 15 points already. Targets down below are going to be 1140 now on this profile. Stops oriented above 1180, and that's just the way I'm looking at gold right now. So it's nice to have new profiles appear on the daily, and I get some new information there. Let's see here. Okay. Taking a look at silver really quick. It's been the bane of a lot of folks' existence here, but just want to give some new, inflection points here that kind of Custer's last stance on this. 1675, that general neighborhood. And as you can see, silver just continues to show relative weakness towards gold. You've got some 1526 areas down below that could be looked at as kind of short-term bounce areas possibly. You've got maximum leverage of 1641 on the sell side, but right now it's really kind of a non-tradable event since a new profile appeared. And I love these daily inflection points to leverage off of. We just don't really have anything like gold that kind of satisfied some terms on gold before relative to silver. So let's take a look at crude oil. This thing's kind of bounced back a little bit. Pull this up here. Again, back to that magical 80 area, general area, and we've reached a high today of around 80. So, previous inflection points on previous profiles that are very recent, I kind of love to, leverage off of those too. So I'm looking at this as a sell opportunity with targets down below 76.54. When we come back, we're going to get into some current and kind of finish up the usual suspects. And we're going to take a look at the ruble, which has been kind of the free trade on the books, basically, and how that thing has lurched toward 50. As we had talked about. We'll be back in a few minutes, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Let's take a look at the ruble really quick because I pulled this up. We had talked about some targets above at 50. I know that sounded insane at the time. We were trading about 37, but lo and behold, highs yesterday were 48.50. You know, this is kind of a free-floating situation. I think the Russian central bank has backed off of this for a while. Again, that kind of blew some people's heads off up top. But again, no new profiles on the daily. So again, I don't see a lot of reasons to really get out of this trade on a long-term basis. We talked about lightening up a little bit possibly because this had been, you know, we wanted to turn something into a free trade if possible. You know, you always want to, you don't always want to do this, but it's not a bad idea to, you know, when you have something like this, to try to kind of leg out of it, put some stops in, or kind of, you know, trade profiles, get out of some of it, and then kind of, you know, not play around with the rest of it, but just, you know, keep some skin in the game, you know, in case it just continues to go crazy, and just kind of keep regulating that trade up relative to profiles. Here's the 240. You got decent support around 44.71 rounds, 44.72 rounded off, splashing in some, you know, just basic trading psychology stuff. I mean, we could talk about that for days, but you know, that's kind of the way I look at things. So the ruble, a nice situation if you've kind of followed along with us. and I don't see that really turning south intensely anytime soon. So I think 50 is still in order. The yen, we talked about 115 being the targets here. We overshot that a little bit, got as high as around 115.50, then we backed off below 114. So I think we satisfied some targets on the yen, at least temporarily. I don't know if you guys were watching, but the Japanese have been in some meetings with the Chinese and all the things that are going on there. I mean, to see the faces on those people from Japan, I mean, they look terrified, and I don't think they know exactly what to do. They're kind of using all measures available to them, which obviously, if you run the country, you can kind of flip-flop things around as much as you want. It's concerning that this thing actually may end up going above 125. And when I say that, like I talk about the yen going up, it's actually the devaluation of the yen. This is the USD JPY, the JPY USD. So again, just keep that in mind. We're talking about the yen actually getting weaker, but that relationship going higher. If you're trading yen futures, you know that that's a whole different kind of scale. And if you're trading yen futures also, you're kind of shorting this instead of going long, the opposite. The numbers on the 240 side that we started breaking down below, 114.89, let's just call it 115 neighborhood. That was kind of a nice low area there, but nothing to key off down here. No areas to buy support here right now. If you're using the 240s to kind of regulate this trade, you've obviously had a reason to get out of it around 115 because that's where the short, the 240 breakdown happened, and that's kind of the way I'm looking at the end right now. Take a look at the euro. We've had some decent downside moves here. Let me see if I can pull this up. Oh, okay, here we go. And we've been as low as, 123.5? Is that what that is? Ballpark, 123.58, something like that. Still, not really showing any reasons to get out of this except for we do have a little bit of divergence happening here, lower prices on the euro and higher lows on the navigator. But again, I'm a little more partial to just kind of stepping back and looking at the broad picture here, and that close below on the weekly and then retest on those weekly unfair lows at 125.74. That's going to kind of just be my Custer's last stance on the short, say uncle above, and just try to hang on to this thing. I mean, this has been a great trade from the 135 area, and I think, we had talked about this going below 120. Still going to stand by that, just like we talked about the yen going up to 115, and that's the situation on the euro. We talked about the pound too. Just had a recent breakdown and close below and retest around 159.80. I still like this trade from the short side and don't see a lot of reasons to get out of this. Here's the weekly situation, very similar to the euro. Weekly unfair lows 159.52. That's kind of the point of concern for me. We'll be right back, folks. Hang in there.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Just a couple of photos up on the den. This is one magnificent place, and man, just a great way to decompress off the. You guys have been trading for a while. This is my nephew here. He came here from Atlanta, and I think he was relatively impressed, and he kind of came to see some of this and some of the beauties of this place. So. If you ever want to come to a nice place, decompress off the trading world, this is not a bad place to come. And just want to throw that out there. All right, took a look at the British pound. Aussie dollar we've been real short on. And the reason being, let's see if I can get this up. Some fundamental reasons were kind of clouding my mind a little bit. I try not to let that happen until I hear the word central bank wants, and when that happens, you kind of got to pay attention to that. And that historically to me has been proven that you don't want to mess with those folks when they start that kind of rhetoric or dialogue. So, we were looking for reasons to short or stay short the Aussie dollar. That started around the 93 area. A little bit higher on the daily, but we finally got that close below in the most recent weekly profile, and that 87.19 area now is what I'm looking for on the retest of the Aussie to even go lower. I mean, I don't know how you guys feel about that, but let's just point out that number again, 87.19. I'm hoping and praying that price action goes back up to there. And guess what? Interesting. 87.26, similar neighborhood on the dailies now, with a new profile appearing higher than price action. Now remember, when you have a profile appearing higher, as we talk about all the time, that's very bearish. And the same thing is when you have a profile appearing lower away from price action, is very bullish. So I'm taking that. And again, these are kind of esoteric little things that, that we've explored and seen over the years. I'm feeling very good about this. I hope that we can get back up to 87.19, 87.26 for kind of a maximum leverage situation on the short side on the Aussie dollar. So that's the tone on that one. Let's pull up IBM, because this is something I've been really looking at. It's just kind of been a nice, ugly situation in a very strong market to try to, have some trade insanity, basically. And again, this market making new all-time highs, just IBM doesn't care. So 163.27, again, I'm hoping that we get back up into that area so we can kind of leverage this on the way down. Again, there's not a lot of people interested in this company, and I think there's some dark clouds hanging over it. Therefore, the cool thing is a lot of pensions and, big portfolio managers have this in their portfolio because they have to. And, if they're exiting this now as an individual kind of anomaly that they have to, their trading plans a lot of times is like, okay, when we have losers, when we have a certain percentage drawdown, on individual stocks, there's a whole grid of responsible responses, I guess, that they have to kind of adhere to in their charters. I mean, I know this because I know a lot of these guys. And if they're still, trying to eloquently exit these particular instruments like this, it doesn't really happen immediately. I mean, these are like massive holdings by quite a few folks. And I mean, I know there's a lot of articles you can read about IBM in general, and, none of them are good. And, there's some people jumping on the short bandwagon, like people like me who are kind of talking about these things. But again, you've got the help also of not just the possibility of a massive short squeeze, problematic for you. You've got the help of just an orderly exit of this particular instrument, and a possibility, of reweighting, more than likely, and a possibility of this thing, maybe not being the bellwether tech stock that it once was. So I want to take a look at Facebook really quick, because this thing's acted quite well after the latest announcements. And here's the weekly situation. We talked about leveraging off 73. It's hanging in there. And on the daily, I know we kind of broke stride and broke down, but again, just to kind of point out some very important numbers, 73, a real, simple, easy trading situation on Facebook to stay, put stops down below there and just kind of see, how the market's going to digest all this. On that same note, I want to pull up Alibaba, and, my goodness, we talked about this, that kind of run up through 100 and back off, that classic without any technicals, compiled into the equation. Those are kind of day trade little anomalies that happen that are really cool to use. But then, we got the close above, we got the retest around 100. Remember, this 100 area is kind of magical. Blow through, back off, close above, retest, boom, off to the races. This is, one of the stocks that, a lot of people have, hopes that, this ends up turning into something very significant, even though it already is very significant. But, there's nothing really standing in the way here of this thing. There's really no reasons, in my opinion, to short this. In my opinion, this is our 240 grid. You're looking for areas of support to buy this until you're told differently and you start to have some technical damage on Alibaba. If I can get this off here. How are we doing on the connection, Al? We looking okay? I'm not personally looking. Okay. Okay for now. Okay. All right. Wanted to pull up ExxonMobil, still a massive, massive component that we have to pay attention to. In my opinion, 98.32. I would hope that we can get up there. That's something I pulled out this morning. We've got a filtering database that kind of pulls out. Well, on the same time frame, you guys don't have that on the scanner, but on the same time frame, unfair lows against unfair highs when they match up like this. This is an extremely powerful area to pay attention to. 98.32 ExxonMobil. I'm hoping that we gravitate up into that area. We reached a high this morning. It looks like, what is that? 97.50 approximately. So, we're getting close to it. That's where I'm going to look at this with a really hard stance on the short side with stops above 98.32. We got to look at Tesla because this is something that, I had some, when you're driving around an island in a circle like the past couple of days, you have a chance to talk to your co-drivers. And we had some pretty long conversations about Tesla. And I told him technically this 241.5 into on the daily inflection point up for highs into this 242.15 area. We've never closed above on a weekly. We've kind of poked our head up, reached a high of 247.5. But now we're kind of getting back down below there. I'm not, technically speaking, this doesn't look right to me. Versus the market on a relative scale, it doesn't look like right. Fundamentally, we were just chatting away about this company and about the simplicity of it. And I know you guys have read all the literature about this company and, what they have embarking in front of them. Here's the daily situation as I pull this up here. Let me just pull this up. A car that, changes all the boundaries. And they can't make them fast enough. There's a 2-year backlog on orders and things like that, and they're going into, the SUV and then the economy stage. They kind of did it backwards from all the other types of splashes that happen on, in a scene like this. They started with the ultra high end that are scaling down. I'm beating a dead horse here. I know you guys know all that, but technically speaking, it just doesn't look right, And I'm still a fan of trying to leverage technically off the short side around that neighborhood, 241.5, 242.5. So, we just, especially with the market just screaming and the NASDAQ screaming, it just, I think it's worth a couple of shots. If the market ever turns south, this thing may, act accordingly, and that's just kind of the way I'm looking at Tesla. Even though when you look at the company's fundamentals, it's mind-boggling what they have in front of them. That's very positive. Apple. Talked about not shorting this and zero reasons to even play around from the short side, but now we've got, as of this morning, got a new profile appearing around, let's just call it 110. Let me just see where we're at this morning. 109.20. I don't know if that's a correct print down below there, but 109.20 is, let me just make sure that's true. 109.20 is, I guess, our pre-market price. You've got a chance to play around with this around 110, 109.80. You got big-time support now at 105.85. I'd almost be looking at this more from a buy support area still because we're just in that defined long-term uptrend. And I just, again, short-term opportunity possibly around 109.80. But again, that would be maximum support right now at 105.85 on Apple. Excuse me, I'm trying to get this eSIM was kind of screwed up here. Taking a look at cotton. Don't look at this too often. Let me just pull this up. Let's pull up the dollar first because it kind of has a bearing on all this. I was going to do that earlier, but I forgot. Let me see here. Where's that? Here we go. A lot of people are calling for this to go much higher. And again, the basic commodities always have a a relativity to what's being priced in dollars and that relationship. Gold in particular has really taken it on the chin based on that alone. But 87.49 pre-market, we've got a new set of inflection points that's probably going to appear on the dollar. I think the dollar possibly is going to take a breather now. I think we've reached some decent targets above. Here's the situation on the daily. I'm sorry, I didn't point that out. We've talked about passing on short opportunities here, but I think with the new profile appearing on the daily, we could kind of rattle around for a bit. Here's the 240s. Here's support on the 240s, 87.34 rounded off. But again, with that new daily box, so to speak, attempting to appear that may appear tomorrow or on today's close, I think the dollar may kind of rattle around here for a little bit. And therefore, taking a look at some of the cottons of the world, let me pull that back up. And here's the situation on cotton. I'm kind of a fan of going long cotton based on that alone because, the dollar giving this thing a break, it's actually hung. This is a weekly situation on cotton. It's kind of hung in there. And I'm looking at cotton with stops below 63.61 based on, my appetite for risk. Your appetite may be different. But I think you got some targets above on cotton that you could reach now. And those targets are initially 64.83. And even higher. Where are we trading pre-market here? 64.30. That's not a great target. That's the daily short-term targets. But if we get a close above that, that would be super positive for cotton, in my opinion, because then you've cleared the weekly M for lows and the daily M for highs, and then you've got some targets much higher, 69.96 up top. Let's just call it 70. That doesn't have to happen, but considering what I think the dollar may kind of just relax here a little bit. It's not my gut feeling. It's just, we've kind of come a long way really quick here. And, the fact that the, Republicans are kind of taking over, it seemingly would have made that thing shoot up a lot farther. That's kind of my thoughts on the dollar. And, a little bit of 20% fundamental thoughts in there. Sorry. I want to take a look at coffee in the same light. We're at weekly M for lows now. I was kind of looking around this weekend, at general commodities that I don't normally take a look at anymore because there's been so much opportunity lately in the currencies, the notes, some of the indices. I've kind of left these alone because they haven't really been the commodity du jour. Here's the weekly M for lows, 181.31. I think this is also of the same nature, a decent trading opportunity from the long side with stops below. You've got that profile sitting there. You gravitated all the way back down. And by the way, 181.31 coupled with 184.45. Coffee can go a long ways pretty quick. Clearing these hurdles, getting a close above, I'm going to feel much, much better about a close above the weekly and daily M for lows to be able to go long this, hoping that the dollar will give us a little bit of a break here. Guys, we're going to come back after the last break here, kind of sum up some things pre-market, and then it'll be Steve Rhodes, the man. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Got Twitter up, kind of the same situation. Not exactly the same. Tesla just not showing a lot of cooperation beta-wise, high beta-wise as the market's going up. I like this on the short side still, 41.13. Remember, if the markets turn south, you want to generally be in stocks on the short side that are kind of already showing their hand. Twitter, very easy to see, showing its hand kind of situation, 41.13 on Twitter. Again, it's just been a rough last week for this stock, but that's the situation on Twitter. I want to kind of revisit some of these, some of the indices before we go to kind of head off here. We have Mike from Korea on. Is that true, Al?
Hello.
Hey, Mike.
Hello. Annyeonghaseyo. How are you doing? Yes.
Annyeonghaseyo. Annyeonghaseyo. Kamsahamnida.
Annyeonghaseyo. I called you about 3 months ago.
Okay.
I called you about 3 months ago when you were substituting for Tom in the afternoon, and I called you about Facebook just before their earnings. and then it exploded to the upside.
Okay.
Mike, remember?
I think so. Yeah, I do
How
remember.
you doing?
Yes,
so now
thank you. I'm doing good.
Yes, 'cause now I'm in the Korea now.
Okay. I love that place.
And we love Hanguk, we love Korea, but we saw that handshake between Abe and Ping, which was like somebody taking a diarrhea dump on Asia relations. I mean,
it was unbelievable.
How did you feel when you saw that? Unbelievable, unbelievable.
Yeah, I mean, it was.
What are the
was,
repercussions?
Yeah, I don't know. I mean, it's almost like Japan showed. There's going to be some good trading along those seams based on Japan not knowing how they're going to fix their situation. It's just going to be, volatility, and as traders, I think that's, what we love. But, the yen hit 115. I think we've been talking about it going, staging up and still not showing any reason whatsoever to short that thing. Staging up into the 120, 125.
Why would you?
Yeah, I know. I mean,
that's another diarrhea in motion right there. Just get out of the way.
Yeah, I hear you. That's kind of the way I'm looking at it. But that was the weirdest international face in a huge stage that I have ever seen in my life. I mean, I guess maybe me and you were not the only people that saw that, but man, it was incredible.
We live in Asia.
Yeah.
So we get the concept of faith, and Ping totally just made Abe lose the biggest face ever. What's it going to come to? I mean, was Ping just doing that for the domestic audience, or is that just? What was that? I'm going to hang up, but before you go, I would love to hear your price targets for Baba going into the next 5 years. Is it going to get $2,000? And I'll talk to you again, and I love you. Have a good one.
Thanks, Mike, for calling in. We've actually got to cut this show now. I hear the music, actually. We'll kind of get some thoughts on Alibaba and a little bit more about the Asian face thing tomorrow. Stay tuned for Steve Rhodes. He's incredible. You'll enjoy the heck out of it. And thanks for having us today. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.